Imagine a family in mourning. In the wake of a sudden loss, they are counting on a 1 crore rupee life insurance payout to secure their future. But instead of the support they expected, they meet a wall of administrative delays. The cause isn't a legal technicality or a missed premium. It is simply that the physical policy document was lost during a house move years ago, and without it, the claim process has ground to a halt. This data shows how often the physical model fails when it is needed most. Today, 70% of Indian families struggle to locate their physical insurance documents during medical emergencies or after a primary policyholder passes away. When policies cannot be found, the money stays with the insurer. This has led to a staggering 8,900 crore rupees in unclaimed funds, money that was meant to protect families, but now sits as dormant assets because the paperwork vanished. For decades, the insurance industry relied on this: scattered paperwork hoarded in cabinets and drawers, vulnerable to fire, floods, or the passage of time. This creates a succession risk. If your family cannot find the document during a crisis, the financial shield you built is effectively broken. Solving this systemic failure requires moving away from physical storage and toward technological centralization. This is the role of the e-insurance account, or eIA, a centralized digital vault designed to protect your entire portfolio. It is the same transition the stock market made years ago. Wealth used to be managed through chaotic physical trading and shouting on the floor. The assets themselves were paper certificates. If they were torn, lost, or degraded, your ownership was in jeopardy. Just as demat accounts moved those shares into a secure digital format, the eIA does the same for insurance, converting physical risk into a verified digital record. Life, health, and motor policies from different providers all sit under one roof. Because the record is digital, it is immune to theft, fire, or the risk of being thrown away by mistake. By shifting to an eIA, you consolidate a fragile collection of files into a single, permanent digital asset. The goal is to ensure that a grieving family never has to go on a scavenger hunt for policy details. The eIA facilitates this by replacing the box of old documents with a single, universal 13-digit number that identifies every policy you own. To make sure this information is accessible when you are unable to provide it, the system uses a specific role: the authorized representative. Distinguish this role from the nominee. The nominee receives the payout. The authorized representative manages account access. If the policyholder passes away, the representative notifies the repository, unlocking the policy data. This allows the nominee to start the claim immediately. This structure ensures that the financial protection you intended for your family is never hidden behind an inaccessible account or a lost file. Opening an e-insurance account is entirely free and relies on a one-time verification process. You start by choosing an authorized repository, like NSDL or CAMS, to host your digital portfolio. After submitting your identity and address proof, you must provide a canceled check. This registers your bank account, ensuring all future payouts are routed electronically and without delay. Once you have your 13-digit eIA number, you can instruct current insurers to digitize your paper policies and link them to the account. This centralizes your admin too. This diagram shows how a single update, like a new phone number or address, instantly updates your records across every insurance company linked to your account. Paying your premiums is the first step in protecting your family, but ensuring they have a verified path to the claim is what actually completes that promise. True protection isn't about hoarding paper. It's about ensuring your family has instant access